My name is Brian Watkins, and this is a video tutorial for the third homework assignment in my Accounting 231 class, where we go over specifically inventory related transactions. And QuickBooks is getting a lot better with that, but there's still some tricky parts that we have to review to get you ready for the ultimate final exam. So be sure you have homework number 3 printed out, that you've taken a look at it. Understand what you're doing with the business so that the various transactions make sense. We're running a fishing supply website that offers complete fishing packages to tourists. So we'll put this aside now and get started. These 3 questions, actually there's 4, but we'll ignore the tax ID, are the most important part of any QuickBooks exercise. What we'll do here, I will just call it Accounting 231 homework number 3, but you would put your own name there. The industry we're going to use is the retail shop or online commerce, which is probably the broadest category, so that we can get you guys trained on any kind of QuickBooks you need to do. The company type for today is a sole proprietorship, meaning that one party owns the business and keeps track of their equity in an owner's equity account. As you may have noticed in prior assignments, if you were to, for example, call this a corporation, it would set up common stock and other corporate related accounts that would make it impossible for you to handle the transactions of a sole proprietorship. So these are foundational questions that you have to get right. Okay, we'll just get through this. The reason we're not entering all this information is that this is an academic exercise. All of these things would come up later when you need them, and it will be extremely helpful for you if you are using QuickBooks for a real business, but we don't need it. So we'll create the file, and I will pause while we get the file created. Of course, it takes a while before you get to this screen, but we immediately say start working, and eventually you get to this screen here. Close the Quick Start Center. QuickBooks is always opening new things that are helpful only to QuickBooks. So here we go to the edit. Okay, and the reason we're going to change some preferences is that in the assignment it tells us that we're going to have to use purchase orders and inventory. So you go to the edit drop down menu, to the preferences, and then you go along the side here till you get to items and inventory. This is a company preference, and all you need to do is click the box. Inventory and purchase orders are active. When I close it, it will want to close everything. Let it. And then just bring it back either by hitting the home page button or go to edit again. So we're going to go to edit again because we're also going to set a sales tax, which again is an item on the left, company preference. Yes, we charge sales tax. Now we have to add the sales tax item and define it. So it automatically comes up, it automatically knows this is a sales tax item. We're just going to call it sales tax. I hit tab, it goes into the description. Tab again, enter a 10. Don't have to enter a 0.1, it's straight percentage there. And then we'll go to tax agency, and we'll just call it the state tax authority. And I'll quick add this. Okay, quick add being a difference between this is a quick add. It goes right to the right list. The other way to add something is to click on the add new. I find quick add to be a little quicker. Okay, now when I try to close this, it's going to come up with another 2 choices. And these 2 choices are both okay. Leave them the way they're set. Everything's taxable. Hit OK. Again, it closes everything. And again, you start by opening up the home page. Now, the first thing you do in any business is to put some money in the bank so that you have the wherewithal to buy inventory or to pay business expenses. We do our banking at the little vault, record deposits. When I click this for the first time, it will ask me to open a bank account. Yes, this is the only time in this exercise we open a bank account, and we're told in the homework that it is Bank of Laie. Again, we don't enter all the other numbers and information because this is only academic. Okay, now here's the deposit screen. Most important thing you do. the most important, is to set the date. We are beginning our exercise on February 1st. So we have to make sure the money is in the bank on February 1st. Otherwise, it'll be difficult to write checks. We receive it from ourselves. So this is the Add New procedure. I click on Add New. I'm not a vendor, a customer, or an employee. I'm an owner, which is an other. So I hit OK. I put my name down. Again, I'll leave the information blank because we don't need it. And then the account I'm going to use, because this is a sole proprietorship, is owner's equity. And the memo, this is always good to put something short here, because when we do our accounting journal, this is what you'll see. So I'll just say, spell it right, initial funding. I'm going to pay cash, $25,000. So before I do anything, I look at my assignment and I physically, with a pencil, line through that first February 1 transaction. Now, when I hit OK, it's going to tell me that I shouldn't be using owner's equity and that I'm in the past. Well, we know we're in the past because that's part of what we have to do to learn QuickBooks. And we're going to post to owner's equity, and that's the proper account for your initial funding. Okay, that beep is going to annoy people in the testing center, so let's get rid of it. I'd go Edit, Preferences, and then we go to General. And we unclick the beep when recording. So even though it's a happy little noise, if you get 100 of you all doing it at the same time, it'll sound like a video arcade. So now we're going to do 4 purchase orders. The purchase order is an invitation to a company who's selling products to sell you certain items. And we're going to define those items in the purchase order. And see what I'm pointing at right here? Items and services. This is the list of items that you sell. And we're going to populate that list by doing the purchase orders. So purchase order number 1. It's now the 2nd. Double check your date. Our vendor is Daiwa Corp. We'll do a quick add, and it's automatically going to make them a vendor because this is a purchase order. It's designed to be sent to a vendor so that they'll send us back some inventory. I'm going to add a new inventory item. It comes up automatically as an inventory part. And the item name is going to be a Saltiga reel. Okay, and any other information we would put here on this screen. The description on purchase transactions. This is what gets printed out when you send your purchase order to your customer. On a sales transaction, that would get printed out on a receipt if we sold these. But we're not going to sell these separately. We're going to assemble them into complete fishing packages. So all we're concerned about is the cost, which is $300. Even though we're not going to sell it, QuickBooks demands that you enter merchandise sales as your income account. Now you see this date down here. Don't worry about this date. This has to do with another aspect of the program that we're not using, so this date won't be relevant. Now I have defined this item. One of the big mistakes people make is to fail to then enter a quantity. So we want to order 10 of these, and this is going to be fishing reels. Okay, $3,000, 2, double check, everything's good. So we'll save, and we'll bring up a new one. Yes, it's in the past, we know that. The next one goes to Tackle Direct. We'll add them. It's still the 2nd. We're going to buy 10. So I'm going to add new here. We're going to add these Penn Power Surf rods. Okay, which is a Penn Power Surf rod. And these are fishing rods. We've got the reels, now we need the rods. And the rods cost $50 each. And we're going to get merchandise sales in as our income account. So we've defined the item. We'll ignore the spelling. Okay, and now that we've defined the item, let's buy the item. We're going to order 10 of them. And this memo will be the fishing rod. All right, 10 at 50, date's good. ready to go. Yes. So now let's ignore. We'll look at our third purchase order to Moi Moi Company. We'll add them to our list. And we're going to define a new item. And this item is monofilament line. Monofilament line. This is fishing line. So I'll just call it line. And the cost to us is $10 per roll of monofilament. So I'll put $10 there. And nope, not sales discounts. I want merchandise sales. All right, everything is good. We've defined the part. Now we buy the part, 10 of them. And this is the fishing line. Okay, and we have one more to do. The fourth is to Diamond Fishing Supply. And what we're buying here are tackle boxes. So when the item comes up, tackle box. And we have a whole series of things we buy with this, and it adds up to about $100 each. And our income account is merchandise sales. And we're going to buy 10 of them. So these are the tackle boxes. Okay, so double check. Yes, everything is $100. Good, so we're done with our purchase orders. Now, should you have made an error in your purchase orders, you can click on the purchase order screen. You can use the previous button, and you can look at any one of them. We haven't received them yet, so at this point, if you made a change, everything would be okay. We'll just close this window. And the next thing we're going to do is write a check to Gary's Web Design. So I'm writing a check. When I want to put numbers on my check, I have to unclick this box. So now I can put the number 1 up there. The date is now February 5th, so I get that date right. Gary's Web Design is my vendor. And I'm going to get a for website and first year hosting. Okay, so this is a clear expense transaction. We're going to get our website hosted there for a year, so $1,500, and the memo will say website hosting and design. All right, $1,500. Gary's Web Design, 2.5. Everything looks good. Save it and close it. And again, checks are the same way. If I made a mistake, I go to checks, I go previous, and I look at it. If it's totally wrong, I right-click, delete the check, and start over again. But it's not, so we're just going to do it this way. QuickBooks makes it very hard to actually delete things, and that's a protection to you. So now we're going to receive our inventory. So we just follow the arrow. We've done a purchase order. So now we click. There's 2 choices. We receive with a bill or without a bill. And we studied how to receive without a bill last time, and it just adds an extra step of getting a receipt. But here we get a bill, and it contains additional shipping charges. It's from Daiwa Corp. It's the 12th. So let's go through these in order. February 12th, click the arrow, select Daiwa. It will tell us there's an open purchase order. We select the purchase order. Okay, now here's all the information from our purchase order. But we now have new information that was provided to us on the bill. The most important of which is there's terms for repayment of the bill. 2.5/10, net 30. So we look in our terms. We don't see that in the pre-programmed terms, so we're going to add new terms. Now, I'm going to name the terms, 2.5/10, net 30. This does nothing except put these words in the list. That's all that this does. In order to make it functional, we have to know that net 30 means it's paid in 30 days. 2.5/10 means it's a 2.5% discount if the discount is paid within 10 days. these 3 boxes are crucial. You can't just put the terms here. So once I say OK, now for the rest of the exercise, or as long as I use this company, these books contain that set of terms. Okay, Daiwa, they sold us the fishing reels, but we knew something else from our bill. We know that they charged us an additional shipping of $400, so we have to add that. And the way we're going to add it is just go right in here and change that to $3,400. So recalculate, and there we go. Now that our bill is $3,400, we know that's correct. We look at the described transaction. It doesn't say we pay it, so we'll close the bill and move to the next one. Now the terms for Daiwa Corp, we've entered them. Sure, we want them to appear next time. Okay, so the next thing that happens, oh, and by the way, just so you know what we just did, if I go to my inventory, if I go to Reports, Inventory, Summary, you can see that I just took in the reels, 10 of them at $340. So if I get to a point where I want to sell and I've got zeros here, it's because I never received the inventory. So it is an important step we're doing. So let's receive the large box from Moi Moi now. That will be on the 13th. Moi Moi. Yes. And the purchase order information comes in. And what do we have new? It says a bill for $120, the extra being shipping costs. So we changed the amount from $100 to $120. Okay, recalculate. Now, the terms. No terms are given. So what we're going to do is use the pre-programmed due on receipt. That will keep this bill always showing up when you get a list of the bills that are due. So even though they haven't given us terms, we know they expect to be paid. So we'll keep this bill right on top. This is for the fishing line. I think everything's good there. 13th and Moi Moi. Good. We'll save and close that. So now we have the line. So next we have Tackle Direct. Receive inventory with a bill. It's now the 15th. Tackle Direct. Yes, we'll take the purchase order. Now this one has a wrinkle. They only were able to ship us 9 rods. We ordered 10. They must have been out of stock. So I changed the quantity here. It's now 9. Recalculate. It goes down to 450. And we go fishing rods. And the terms we were given, it says due upon receipt. So we set the terms. Everything's done. But we're short a rod. So we'll save and close. Alright, finally we get the Diamond Fishing Supply goods. So we receive inventory. It's now the 16th. Diamond Fishing Supply. Let's get the purchase order. Okay, and there's a bill reflecting $320 net 45. That's not in the list. So I'm going to add 3/20 net 45, which means net is due in 45 days, discount percentage is 3 if paid within 20 days. So those are the terms now for the fishing supply. This is for the tackle boxes. Tackle boxes. Okay, and it looks like there was an extra $50 for shipping. So I'm going to just put in 50 there, recalculate, and everything looks good. Okay, so we'll look at our assignment now, and it says the next thing we're going to do, since we only got 9 rods, is we're going to drive over to IEA and we're going to buy one retail. It's important to us to get these 10 packages done. The people shipped us 9, so we need 1 more. So we're going to write a check, and we're going to make that on the 16th. And it's going to be Roy's Fishing Supply. I add it. Done. This is the replacement fishing rod. Okay. And there's two ways to do this one. Okay, I can go to items and I can pull up the Penn Power surf rods, but we're not going to do that this way because we want to make sure. I just cleared it. Okay. Where's fishing supply? What we're going to do instead, replacement fishing rod, we're going to use the inventory adjustment. Now, inventory adjustment is not pre-programmed. We're going to make it an expense account. It's not really an expense. This is just a way to get around one of the problems with the way QuickBooks is structured. It's easy to add a cost to an item, but if you have multiple items, it's impossible. So get in the habit of creating an account called inventory adjustment. We'll make it an other expense. The reason for that is that just drops it down to the very bottom. And this is not an accounting account. This is just a temporary fix for a problem in the QuickBooks software. So what we do is we put this $110 into that inventory adjustment fund. Okay, save and close. And then we immediately go to inventory activities, adjust quantity and value, and I'm going to adjust quantity and total value of my Penn Power surf rods, and I'm going to use money that I temporarily stashed in the inventory adjustment. The new quantity of rods I have is 10 because I just bought one. The new value I have is $110 for the new rod plus the $450 for my existing inventory. So I'm going to have $560 worth of rods. So I'm going to change this to $560, and now the value of those rods is $560 with an average cost of $56. And I spread the cost of that rod over all of them, which is appropriate for inventory. So now when I save and close, if I go to reports and I look at an income statement, you've always got to make sure you see all. You see nothing in inventory adjustment. If you ever see inventory adjustment pop up on your income statement, it's wrong, because that money is supposed to immediately go into your inventory, which is, let's not memorize the report. Let's do a balance sheet now. The money is now in the inventory asset, $5,130. So we have appropriately costed our inventory so that when we sell it, we're selling it at the right price. We know exactly how much it cost us to get that inventory. We had to pay a little extra for one of those fishing rods. And we could see that, if we wish to look at it, in the inventory. And so if we look at the rods, we have 10 of them, $56. All right. Next thing we do is we're going to write a check, $250 payable to Aaron Kalama for assembling 10 fishing poles. First, do the assembly. That takes place in inventory activities. Build assembly. We're going to have to name it, and since we're coming from this page, it automatically knows we're doing an assembly. And this is going to be a complete fishing package. People want to come to Hawaii, they want to fish, they don't want to have to buy stuff. So we're gonna assemble it for them. A complete fishing package. Now, we don't put the cost, but we do know, it tells us in our assignment that we're going to sell this for $999. Income account is always merchandise sales. But the bill of materials will tell us what goes into a complete fishing package. We're going to take some line. We're going to take some surf rods. Just one. We're going to take a reel. Just one. And we're going to take a tackle box. Now, if you're paying attention, you realize that for some reason it's giving you the original purchase costs of these items. So it allows you to edit items straight from this screen. I could also edit items by clicking on the items icon. So let's go to the monofilament line first. When we edit it, get rid of this cover, we see that the average cost is $12. So we're going to change that to 12. Okay. The surf rod, well, its average cost is 56. So we'll change that to 56. All right. The reel, has an average cost of $3.40. So we'll fix that one. Finally, the tackle box has an average of $105. Okay, I'm not sure if this has to do with the screwy dates that we use when we do these exercises, but you need to know that you better take a look at your item before you put it through this process to make sure you're capturing all your costs. So I hit OK. And then it says we have 10 is the maximum number we can build from the quantity on hand. We knew that, so we're going to build all 10 of them. And this is to assemble fishing packages. There we go. The assembly is taking place on February 16th, so we'll build and close. Done. Now if we look at our inventory, you'll see that we have, let's get to all, we'll see that we now have 0 on hand of all these items, but we now have 10 assemblies, and we have all of the costs accounted for. Except Mr. Kalama's check for doing this. So we'll write a check to Aaron Kalama. Okay, we'll quick add him. And this is assembly charges. Okay, and what we'll do is just use that same procedure. It goes to an adjustment account, $250. Assemble fishing packages. Alright, the date is the 16th, so I save and close, and I immediately go to inventory and I adjust the quantity and value. Here we only adjust the value, and we're only adjusting the value of the complete fishing package. So it goes from 5,130 to 5,380, which is 250 plus the 5130. So as soon as I get that in there, this gives you an easier way to see what adjustments have been made. So there's my average cost, and I'm good to go. So now I have my inventory ready to sell. Let's teach you how to do sales of inventory. There's two ways. One is cash, where we create a sales receipt. The other is by credit, where we create an invoice. So our first one looks like we receive a deposit of $999 that's automatically deposited in your bank account via your website. You now must ship a kit to a guy in Seattle. You hadn't thought about that. You had thought you were just going for Hawaii. So what you're going to have to do is sell this guy in Seattle. His name is John White, so we'll quick add him as a customer. And he wants one complete fishing package. We're happy to sell it, but he's not in our state, so we don't want to pay sales tax. And we do that by just taking this, making it non-taxable. So now John doesn't pay sales tax. The payment method is directly to our account, but QuickBooks doesn't know that, so we'll just tell QuickBooks that we're receiving cash. And this is the first sale to John White. Okay, and the problem is, I'm going to save this, close it, looks good. Let's get that cash immediately into the bank. So when I hit record deposits, it comes up and says you have a payment to deposit. So I just click it. Everything is just fine. So I save and close. But now I have another expense because I promised to to ship this, and I didn't think that somebody from Seattle would buy it. So now I've got to go and I've got to write a check to FedEx, and it's the 20th, for $125. This is a post-sale, so it's our expense, not part of inventory. And we don't have shipping, do we? So to add an actual expense account, we make sure that expense is checked, and then we just call it shipping. Make sure that it's not other expense. You want to keep all your expenses in the same category of your statement. So shipping, send package to Washington. All right, send package to Washington. And save and close. Now we don't want this to happen again, so we immediately go to our web design guy and we give him $300 to fix the website. Make sure that it automatically gets shipping. We don't have to pay that anymore. Alright, so we save and close there. That's done. Alright, February 22nd, Hans Mueller gets in touch with us and he wants to buy five full phishing packages on credit. So we create an invoice. Hans Mueller, add him as a customer. Quick add. It's now the 22nd. We make sure that's correct. And since he's buying on credit from us, we can give him terms. Okay? Because we want our cash as soon as possible. So let's incentivize it by giving him terms. Of course, they're not here. But our terms are, if you pay us within 15 days, we'll give you 2% off, but we want everything by the 30. So net 30, 2% discount if paid within 15 days. Because we want our cash as fast as we can get it. And then the rest is just, he wants 5 complete phishing packages. This is taxable. So Hans Mueller sale. Let's tell him thanks. Thank you for your business. That's a huge sale. All right. Terms are good. Date is good. Everything's good. We're going to save and close. Okay. This time, we don't run to the bank because we haven't been paid yet. Now, comes along March 1st, he's going to bring us a check. So you go from create invoices, just go right down the line to receive payments. And we receive it from Hans Mueller. It's now March 1st. He gives us a check, and the amount of the check is 5384.61. You immediately realize that that does not match up with the amount due. But the customer has discounts available. They've paid within their discount period. So I click discounts and credits. Okay, and it uses our terms and says this is the discount that customer got. So we put that into the sales discount. Okay, because this is an incentive to get people to buy from us. So it's a sales discount. Now the discounts are applied, and it looks like our check is perfectly what we needed. So we will say save and close. Don't forget, we just got a check. So we hit record deposit, click, get this into the bank right away. Don't let checks sit around. Because if you did a bank, if I did a balance sheet, okay, and let's just do all, and I saw undeposited funds, that would be incorrect. That would be wrong. Okay, now, the income here is $731.11, but we still have 2 more things we need to do. You'll see in the balance sheet, let's go to the balance sheet, that we have a sales tax payable and we have accounts payable. So let's get all those paid. The way we do that, go to pay bills. We've got plenty of money, so let's just check them all off. We're going to pay them. Now it tells us that there is a, as we go down each one, Moi Moi, I don't see any suggested discount. Tackle Direct, I don't see any suggested discount. Daiwa, well, it looks like that was net 30, but we missed the discount period. Diamond Fishing, but there is a discount for Diamond Fishing. Okay, and if you recall, this is for the tackle boxes. We've already assembled them. They're already in inventory. So where do we put our discount here? We're just going to put our discount against cost of goods sold, because the cost of goods that we sold are really $31.50 less because we got a discount. Okay, there we go. We've done that. We have our ending balance. We'll pay the bills. And you'll notice the dates over here in the corner. So bills are paid. One last thing is to pay the sales taxes. Sales taxes are found in two places, either the helpful icon or the vendor menu. Vendor menu, sales tax, pay sales tax. Or manage sales tax, click on the sales tax button. We have to get these dates right. And these dates should be March 1st. Show sales tax due through March 1st. And we click on it. And there's the money that we're holding. That's not our money. We collected state taxes, so now we've got to give the state the taxes that they charged. So that's done. Now if we look at our reports, let's see if we made money first. And it looks like we made $762.61. So compare your profit and loss with this one. Make sure that there's no visible inventory adjustment. Make sure that your sales discount was that $109.89. We'll close that. For purposes of uploading it, you would want to go to the File menu, Save as PDF. I might as well do that here. So I'm going to save Accounting 231 Homework number 3. And we'll say Income Statement. Put it on my desktop. Done. Taking a little while. Okay. Now next I'm going to go Company and Financial Balance Sheet. Recall that I'm using the standard form. Don't use anything other than the standard regular forms. If you use specific or detailed forms, it's very hard to read them. So what am I looking at on the balance sheet? I'm looking at the fact that there's no accounts payable, I've paid all my bills, and I don't have any undeposited funds. Save as PDF. 231. I don't know if you can use periods and names. 231, Homework number 3, balance sheet. I'll save it in the desktop. And as you know, there's a third, and it's Accountant and Taxes Journal. Don't forget to widen it to everything. See, now you can see those memos come in handy because it tells me what I'm looking at. And I'll save as PDF. Accounting 231, Homework number 3, the General Journal. And that is your homework number 3. Check your balance sheet, $25,762.61, and you're good to go.